I'm John Kaiser at the Metals Investor Forum in Vancouver, September 23rd, 2023. I am here with Mike Power, CEO of Silver Range Resources. Mike, welcome to Vancouver.
Thank you very much, John.
Mike, your focus is on the southwestern United States, looking for high-grade epithermal or carbonate replacement style gold and or silver deposits. This part of the world has had intensive exploration for the past 150 years. And in the last 50 years, there hasn't been, another Comstock or whatever come out of this epithermal style of the deposit. Why do you think there has been such a dearth of discoveries? And what are you bringing to the table that gives you an edge over the past explorers?
Well, the reason we really like Southwest US and particularly Nevada is the gold endowment is fantastic. When you start with that, you know you're going to find something. I mean, if Nevada was a country, it'd be the world's fourth largest gold producer. The discovery works in phases and takes time. And just because something hasn't been found in the last 20 years doesn't mean it can't be found in the next 5 years. I think the Silicon Beatty discoveries are a great example. Change your mind, and all of a sudden things open up. They started with a couple million ounces, and now they're talking 6-8 million ounces in a place that was completely written off. That was the last big discoveries there were the bullfrog days in the early 1900s. So I think there's a great future. It unfortunately takes a lot of optimism and to try and see that. I don't think you can write an area off just because, well, we haven't found anything there in the last 10 years.
And you mentioned in your talk sort of alteration systems, the new methods for measuring them, new theories and all that. Is that a key part of your toolkit that helps you go in there and check out these old showings and then gather additional information so that there might be something there that the previous lookers overlooked?
Absolutely. If we just take what's there and put it in front of somebody, they say, well, a bunch of old showings, old timers must have found it, there's nothing there. If you apply some science to it, you start to look at the alteration package, the model for that kind of deposit. We've gained a tremendous insight over the last 30 years on epithermal deposits, I can point out. New tools to really map the subtle alteration, geochemical halos that couldn't have been identified before. You put it all together and you show somebody, look, there could be really something bigger here than just these little showings. It's going to take a drill hole, but there's a prize here to be had. We try and sell opportunities, not problems, or not mysteries. So we try and develop drill targets on our prospects and market them because we really believe that the future in Nevada is discovering these subcropping deposits, that there's a great field for that.
Permitting in the United States is a bear. We have this not in my backyard entrenched attitude. The U.S. Forest Service is particularly difficult. The BLM is not as bad, but it's still becoming painful. To what extent does where you look hinge on the permitting regime? What do you try to avoid, and what do you prefer to stake your ground in?
If I can speak from the heart, I've worked in Alaska, Yukon, Northwest Territories, Nunavut, BC, and a lot down in Nevada. I've found no better place to work than Nevada. Nevada reminds me of the Yukon 40 years ago. We can do all we need to do as a prospect generator working under the existing regulations with no permitting impediment. If we want to go and do a small drill program, if it's set up under a notice on BLM land, it's basically filling out a spreadsheet and getting it approved by the BLM and then posting a bond. It's very straightforward. The laws are in there, the regulations are in there. It's a smooth process. I found it a wonderful place to work at that size. It is problematic on Forest Service land. I think the Forest Service thinks it's a little Park Service sometimes. And it's a challenge, and that is an impediment when we select a project. We look at it in Forest Service land, the size of the prize better be a little bit bigger. But I think there's an enormous fairway in Nevada and in Arizona and in Utah for working on BLM land, where I think there's probably a lot of ore deposits hanging out.
Now I noticed that your farm out deals, most of them are with private parties, but they don't seem to be the kind of rent a property of merit just long enough to get listed and then drop it and move on to something else. What is the nature of these private parties that you are attracting? What are they looking for? what's bringing them to your portfolio of prospects?
Wish I knew. But I can tell you that the groups we are dealing with, in many cases, they're great people, very strong technically, and they're trying to really build a company both strong financially and technically in their home jurisdiction. So they see our assets and they come to us, find us fairly straightforward to deal with. We are willing to craft a deal with, we're omnivores as far as making a deal goes. What we want to do is preserve that upside. And we'll even rent a property to a listing property, but we want to see the drill holes put where we want them so that the property gets advanced. You know, sometimes people screw up even on a listing and hit something. But if they don't, we want to see the property advanced by some drilling because, as we say, we bet on the prospects, not on a given company or a given drill program succeeding.
Now, you mentioned that you have equity stakes in a number of these private companies who are actually serious about the project.
Yes.
You farm to them, and when they go public. During your talk, you said that one of these companies has a value of $19 million. Was that the implied value of your equity stake in the company or the entire company?
That $19 million is the implied value of our equity stake in that entire project. It's worth much more than that.
Okay, so you're running a very lean machine. You generate revenues from your farm out deals. Right now, your treasury is not particularly strong. But if this company goes public, are there any and you suddenly have this $19 million worth of paper that's liquid? Are there any restrictions on your ability to sell that stock?
From what I recall in the agreement, not very much, and it would be of great value to a pension fund because it's a stake in a serious producing mining complex that they hope to restart quickly. I'll be honest with you, we would love to convert some of our equity stake to interest-bearing cash, and we could run the whole company just on the interest from a couple of these deals, to be honest with you. That's our dream, to become fully self-financing along the lines of, say, an Altius or Globex.
Now, suppose you suddenly had this $20 million cash windfall. How would you expand your prospect generation business model? Would you include drilling at least some holes to provide more geological context? And also, under what circumstances, even if you didn't have this huge amount of money, under what circumstances would you keep a project, sort of the Andre Gaumond moment?
Yeah.
This one is a keeper. I'm not going to punt this.
Okay, to answer your first question, I don't want to forget the lessons we've learned clawing our way up the ladder. We would try and run this corporation as lean as possible. If the prospect generator model on the farm out model alone with minimal drilling is generating us revenues and getting more projects advanced and out there, that might be the way we go. We actually have a small drill, but it's just like a pack sack drill, and we'll use that to dress something up. I don't know if we do any serious drilling because I think it's a bit of a trap for some for some prospect generators, and so I think we might avoid that. With respect to your second question, I have a very great, deep board and technical advisory team. In particular, I got Tim Termundi on the board, who's done this before, and I got Dick Reed, who was chief geologist for Newmont in North America. I would really rely heavily on the judgment of some of our very senior and experienced people to look at our projects, and if we started to see one that for either marketing or market reasons or technical reasons really looked like it should belong in its own vehicle, I'd rely heavily on their judgment to get it out and market it and put it in its own vehicle and spin it out. I think there is a scope for doing that. I would want to proceed carefully in doing so.
Okay. And one final question. You are a data junkie, and I know you go through all the news releases and study the option deals everybody has done. So you understand the whole range of styles of option agreements. What style of farm out agreement do you prefer to make for Silver Range?
I've seen so many different great ideas. Number one, we try and price at market value, looking at our project and say, where does it fit on the spectrum of projects in the area we're working? And we do collect all that data, so I know exactly what a deal is worth in whole. We strive to have a retained interest. Ideally, we'd like it carried further and further along. to maybe a resource at one stage, depending on the quality of the asset and the tenor of the market. How far along can we carry that? Keep that retained interest. And we always want a royalty. We're starting to ask for buyouts in gold, for example, because I just distrust inflationary pressures. We would like success fees or milestone payments, usually based on the size of the resource. That appeals to both sides because a small resource in Nevada can be very economic. 100,000 ounces in the right spot near another existing operation, very valuable. You don't want to saddle it with some, outsized success fee, but you want a right-sized success fee. We believe that at every step of the game, there's something to be had for the prospect generator to cook the idea up in the first place, and we strive to capture that.
And among the 6 farm outs you have in southwestern U.S., how many of them are you the operator on?
We haven't done a lot of that, and we thought about it because it's a good way of generating revenue for the company, but it's also a distraction. We really think maybe the best use of our time is sell it, look for another. That is a judgment call. Right now, I kind of regret maybe not having operator fees coming in from a project. But on the long term, I think stick to your knitting, do what you think you do best, or the market thinks you do best, and work on that. And that's been our approach so far, and I think it will be in the future. But we're trying to get to the end, and the path may change.
Okay, that sounds good. I've been talking with Mike Power, CEO of Silver Range, in Vancouver at the Metals Investor Forum. Thank you, Mike.
Thanks, John, very much.